Coming up, we have your October 2022 Las Vegas real estate market update.
Hey everyone, I'm Steve.
And I'm Kristen.
We are the Thomas Group with Real Broker, your local Las Vegas and Henderson Realtors. Kristen's laughing because she can see that I can barely open my eyes right now because it's pretty bright, right?
It's very bright, yes.
If you can't tell where we are, so this month we are up in the north of Las Vegas, actually in North Las Vegas right now, in Gilcrease Orchard, which is a really, really fun place to come to if you want to pick some pumpkins, if you want to go pick some apples and
get some cider and donuts for Halloween.
Yeah,
I believe they do hay rides as well. They're really getting the mood.
We've been here twice now and we've got terrible timing because every time we come, it's closed. But we keep meaning to come back, and we were just talking on the way here that we will come back this time with our 18-month-old and show them around here. But the space, it's huge. It's on a massive piece of land here, and a lot of you that might be out of state might be thinking, like a pumpkin patch? You've got an orchard here in Las Vegas. And yeah, this city really always does surprise me with what you can find in different elements. Like as you're driving up here, it's a total different feeling, isn't it, to most other areas of the valley. And you said, you know, it's a different type of person that lives out here.
Yeah,
and
there's
100%
horse properties, right? Yeah, like large horse properties. It's really cool.
Yeah, no, it really is. In fact, horse properties make great investments as well. I've been looking at a lot of the numbers on those, and if that's something you're interested in, reach out to us because you might be really surprised to find out that there's horse properties out here. And anyway, that's maybe a topic for another video.
Yes.
Actually, yeah. But I know that you have tuned in to listen to the numbers for September of 2022. October 2022.
Yes.
So should we get into it?
Let's do it. Yeah. So actually, what you were referring to is the numbers that we look at in October are the all of the statistics for the month ending September, end of the month. So that is that. Now, last month, we told you in our video, the slowdown is slowing down, and we got a little bit of pushback, but those numbers don't lie, you guys.
No, they don't.
So we'll show you here what we meant by that and kind of what we saw this month. Next month's going to be a whole new month. We've had some significant changes that we'll tell you about. So we'll tell you what to look forward to. Yeah. All right, so let's start with our single family homes. The median sales price stayed steady last month at $450,000. That is up 10.7% from the previous year. However, that's 10.7% is a lot, but when we were at the peak of everything, we were up over 20%.
Yeah, almost 25%.
Almost 25% at the very peak of it. So we expect the year-over-year growth to kind of keep getting eaten into as we move forward.
Yeah. And what's interesting about that is was the no decrease or on the set exact zero?
Exactly zero.
Exactly the same as last month.
The average sales price went down 1.8%. We saw fewer luxury sales this past month, and obviously the thing with averages is the low lows and the high highs skew things. So that's why I imagine the average sales price still went down a little bit.
Stayed the same.
The average went down.
Oh, the average. Oh, got you.
1.8%.
Okay, that was the median. I'm sorry.
Yeah,
Yeah,
but the median stayed the same, and the median's more
right
focused on the central.
Right.
The central things. Okay, so let's look at the number of units sold, and this is why last month one of the main reasons why we told you the slowdown was slowing down, because we said you were going to see something like this. There were 2,030 single-family homes sold last month. That's up 1.4% from the previous month. Essentially the same, right? Down 36.7% from the same time last year. What happened? I'll tell you what happened.
Okay.
The interest rates had kind of stabilized now we're looking back like 2 months, right? So in August, people were adjusting to the new normal. I know that we told you guys on our team, on everybody else in our office, the sales rep at the new construction communities, we were all noticing that people are adjusting to the new normal, and people need a place to live. So I think everybody was scared for a while, and now when the interest rates kind of stabilized even for a bit, this is our new normal, we kind of saw an uptick in the number of sales.
We did, and there's another statistic that you didn't talk about there that we'll talk about shortly, which I think is actually even more important to look at, but we'll get into that shortly.
What's the
Easy for you to say.
The statistic. Are you talking about pending sales?
No.
No. Oh gosh.
Yeah.
Oh, he's got surprises, everybody. All right. So I would like to talk about pending sales, and this is that indicator that's really going to tell us, among other things, but the main thing that will tell us what we're going to see next month. The pending sales this month, which will be our closings next month, were down 8.5%. Now, what happened?
Can I tell?
You tell.
No, you tell.
You tell.
No, you tell.
Okay. Yeah, because we just saw things actually increase and now they're going to decrease again. Well, interest rates had a very, very volatile month in the month of September. And let me tell you this, the average, this information comes from Freddie Mac. The average 30-year mortgage at the beginning of September was 5.66%. On September 29th, it was 6.7%. So that went up an entire point. And when you're looking at your payments, I mean,
that's significant.
It's significant.
Yeah.
It is significant. So it's making a really big difference, and we're seeing that in the actual sales and what people can afford.
Yeah.
All right, let's move on to our new listings. You had something interesting that you found out about this. Let me tell you the basics of it. There were 3,376 new listings that came on the market last month, down 15.8% from the previous month and down 8.5% from the same time last year. Tell us more about that.
We'll flash up a graph because it's probably, or what I've been looking at in order to show you these numbers, because it's sometimes easier if you visualize it. But the amount of listings that have been coming on the market every month for the last 3 months has been decreasing. Now, there's a lot of doomsdayers out there, right? That like real estate's dropped 40%, where inventory levels are at the highest possible point that they've ever been. Well, they're not, first of all, because we can show you, over the last 6-7 years where the inventory levels have been at the max points, which we're right at that right now. But the important thing to think about or know is that the amount of properties that are hitting the market every single month is decreasing. It's not increasing, it's decreasing. So let's just kind of like think about this, if that's okay, just for a quick second, and maybe evaluate it and summarize it, because I think this is important for people to think about and understand, right? And a shout out here to Joe Herrera of the Joe Taylor Group, because he actually made a good point about this, is right now we don't have a housing crisis, right? And if we talk about what's a housing crisis, like 2006, 2007, 2008, right? Housing crisis in which everybody's property went way below what they paid for. So everybody was underwater, mixed with a lot of other things, right? So that was a housing crisis. But what we've got right now is an affordability crisis, because people can't afford what they thought they could afford or what they could have afforded, last year. But the inventory that's coming on the market is not increasing to a level in which there's just an absolute flood of properties, which would then be a housing crisis and an affordability crisis, which we don't have. And the last point that I want to mention is, what percentage, let me ask you, what percentage of people that sell their home buy another home? I don't know that number, right? But I imagine it's a very large percentage. I think there's only a very small percentage of people that will sell their home and start renting. So all these people that have now, let's take us for example. We bought our home a couple of years ago and we got an interest rate in the low threes. For us to sell our house now and buy another house at the same value, we'd literally be paying twice the amount in our mortgage, which wouldn't make any sense to us. Or we're going to buy a house that's half as good as what we currently own, which we're not going to do either. And this is the same kind of thought process that a lot of other people are going through right now. So unless there's just an influx of inventory, nothing really is going to change. I think home prices are going to take a little longer homes are going to take longer to sell. It's becoming a more balanced market, which is awesome. If you think about last year, when so many people wanted to buy, everyone's like, this is a perfect time to buy. It's a great time to buy. Well, what's happened between now and then is the only thing that's happened is interest rates. Now, if everything's normalizing and you're able to get more leverage and have more leverage as a buyer, like, this is a good thing. And I'm sure you'll talk about shortly about the amazing deals on new construction that you've been finding people recently. So, you know, in summary, and I know I kind of like went on a little bit of a tangent there, but the world isn't falling apart. Las Vegas inventory isn't through the roof. There's still plenty of buyers. Homes are still selling quickly at the right price. If you're a homeowner right now and you're wanting to sell your home, it's absolutely critical that you move with the times and you are understanding the inventory in your area. Peace out.
Well, something that I forgot to mention before, but you just reminded me of when you said that, like, the sky isn't falling out or whatever. We're just getting back to more normal. Our closings right now, we are on track to close at the same number of closings that we did in 2019. Our inventory levels are the same that we've seen in 2019, 2015, 2016. So it's not like we're in a market that we haven't seen before.
Yeah,
so,
it's just adjusting, you know.
It's adjusting.
And it's at what point does it adjust to, right? Because why I'm so passionate about the inventory levels and watching the amount of properties that are hitting the market is because we didn't know.
Right.
Like, because we were in a pandemic and there was so many different variables and like unknown factors, we didn't know where the ceiling would be in terms of inventory.
Right.
I think we've hit it. Like like if we look at the charts look like we've hit the max amount of we're at kind of at the max amount, and we'll see what happens there.
Yeah, absolutely. So, well, speaking of inventory, there were 8,121 single-family homes available for sale. That increased 1.6% from the previous month. So, you know, very similar. And it increased 134.5% from the same time last year. But we're comparing this market to like
apples to oranges.
Yeah, apples to oranges. It was like when we couldn't compare during COVID those numbers to pre-COVID. We can't compare COVID numbers to now.
Post-COVID, yeah.
Yeah, it's just not the same. Our months of inventory is at 4, which we are definitely in a balanced market. We say this every month, but it really depends on your neighborhood. But we are seeing seller concessions. It's very normal now for sellers to be
buying the rate
down. And I'm going to insert my new construction pitch in here right now since you brought it up. Right now, I think is like the best time, if you weren't doing it a month ago, now is the second best time to buy a new construction home, because the builders still have all this inventory that they started building during all of the demand of last year. They have all of these homes. They want to offload these homes by the end of the year, ideally. You can get great incentives. They're buying down your rate, which, you know, for some of my clients, like right now, they literally can't afford a resale home with the rates that it is. Like, their only choice is the resale, because we can
is new construction.
Sorry, is new construction, right? Because we can get them the 4.99% rate. So if you are, you know, trying to get into a home by the end of the year or something soon, give me a call. You do need independent representation. I can help you negotiate an awesome deal and tell you where, you know, you could be looking to get those awesome deals. So
yeah, Kristen's helped a whole bunch of people recently, and she's been sharing with me the details. And I think and it depends where you're looking, right? But there is some phenomenal opportunities to be had as well.
Yeah, for sure. Very last thing I wanted to mention for single family homes is 34 is the average days on market. So just over a month. So, you know, I mean, if you're in a popular area and priced well, you'll still be selling quickly. But again, like Steve said, don't be chasing the old numbers. There's a lot of sellers right now that are a little bit unrealistic. They know what their neighbors got in March, and you're not going to get that.
Yeah, although the property could theoretically appraise.
It would appraise, yeah.
Right, it might appraise, but it's just this affordability issue, right? That we've got to be looking at, and dependent on the price of your home, it's going to have a specific market that it's going to appeal to. So, got to be really dialed in.
Right, absolutely. All right, really quick, let us zip through the condo and townhome numbers. The median sales price was $270,000. That increased 1.9% from the previous month and 17.4% from the same time last year. Because as we say it every month, we're going to say it again in case you are new to our channel. But people need a place to live. They might be pushed out of the single family home market. They're buying condos and townhomes, so they are really still maintaining their
propping
value.
the market up as well.
Yeah, exactly. There were 524 units that exchanged hands last month, down 14.2%. Interesting. Down 14.2% from the previous month and down 40% from the same time last year. So that is interesting because single family homes kind of stayed, it increased. Condos and townhomes, we saw a decrease again. I'm wondering as well as if these buyers are especially being hit by the higher interest rates.
100%.
And that, I think so. And that's why we're seeing that. Makes sense. New listings again is down, same as single family, down 23% month over month and 13% year over year. Our inventory, 1,849 condos and townhomes for sale, up 2% from the previous month. So again, like Steve was saying, our inventory levels are stabilizing and up 194% year over year. Crazy. 3.5 months of inventory. So, it's a little bit favoring the seller, right? But I mean again,
it's don't get confused by that number just because right now, and we've mentioned this in previous market updates, is real estate's not just local, right, to Las Vegas, it's hyper local.
It is.
So dependent on where you are, there's different markets happening in the master plan community of Summerlin. Some it's favoring the seller, some it's favoring the buyer. So you got to get really dialed into the numbers and know what's going on.
Right. Oh, and last thing I wanted to mention is pending sales are down 7.2%. So I imagine we'll see the actual units sold down next month as well. Again, these high mortgage rates are hurting everybody. And really quick, one last thing I wanted to mention about mortgage rates. We got our jobs report out in the past couple of weeks. It's still performing better. It sounds crazy because the jobs report came out. It was a good report. Theoretically, wages are up 5% year over year. However, that's not what the Fed wants to see. The Fed wants to see the economy cooling down. And until they see that, Jerome Powell, the Fed chair, has been very clear that they are going to stay aggressive on pushing up the Fed rate. So we expect when they meet at the beginning of November to see another 0.75 increase in the rate. And while that does not have a direct correlation to mortgage interest rates, we've seen the interest rates increase.
Being directly affected by it.
Indirectly,
This is an interesting topic, I think, and something to be aware of. During the pandemic and since the pandemic, the amount of money printing that's happened it's gone through the roof. Now, just in terms of basic economics, the more money that is out there is essentially devaluing everything else or inflating prices of everything else. And how they're trying to counteract that, is of course with interest rates. But what is the damage that all of this money printing has caused? Are we heading for times like when our parents bought homes, and I'm sure some of you guys out there watching maybe owned homes 30 years ago, 40 years ago at 15, 16% interest rates? They were real times, and back in those times there wasn't a housing crisis. People still bought homes, but it was just a different market. Right. So why I'm sharing this with you is because I know there's a lot of people out there, including clients of my own, that are waiting for something to happen in the market in which all of the prices of homes suddenly drop to a price that they can now afford. But the reality is, I don't think that's happening. Are we going to see a stabilization? Yes. Have we been? Yes. But the most important factor that basically every buyer forgets to think about is the interest rate. The interest rate has the biggest impact on your affordability. So if you're really rolling the dice right now and you're renting, the Fed's giving us, no one's got a crystal ball.
Very clear.
But things are going up. Yeah. So look, don't buy a home if you're going to struggle. That's not a smart thing to do. But if you're going to want a roof over your head for the next 5 years, and you look like you're going to be staying in the same place, and you can afford the payments, then and I've heard this saying being thrown around a lot, and I liked it at first, but I've heard it so much I hate it.
I hate it. I know what you're going to say.
Yeah, but it makes a lot of sense. You marry the house and you date the rate. Right, but it is a bit cringy, but it's true. It's true, right? You can always refinance. If rates go down, you can always refinance, and as long as you can always afford your payment, if you're able to refinance, that's now money you're able to save every month. Right. But if we're always just you know, trying to predict what's going to happen. You might get lucky, but generally nobody can time a market.
Even seasoned investors can't time the market.
No.
What's the saying?
No, I was just going to say the only way to win is by having some skin in the game.
Yeah.
And not over leveraging yourself.
Right.
Oh, can I just talk about this real quick?
Yes, you can.
Because I just
so excited about
just talking about over leveraging, and we'll see what might happen with this. But and this is another thing that ties into the housing market as well, right? The stock market.
Yes.
How's the stock market been doing recently? Terrible. Yeah, and you know, if for people that have got skin in the game, they're saying the bottom is already here. For people that are sitting on cash, they say we're about to sit more. So you know, the perspective is everything. But I know that there were in the last couple of years a lot of people that leveraged their assets to buy loans. To buy a house, to get a loan. Now, if the value of your assets is dropping significantly, that could have a knock-on effect into certain portions. But I think that will only apply in the luxury market between certain price ranges.
Right.
Maybe like the $1 million to $3 million like price point.
Good point.
But for people that don't understand, know what that means is basically if I've got a stock portfolio and I want to get a loan, but I can't use traditional means or for whatever reason, I can leverage against my they were my fans, just so you know.
No, they were definitely honking at me.
I can leverage my my portfolio to loan against, and but if now the value of that portfolio goes down, you might be in a sticky situation if you're over leveraged.
Right. Yeah. Absolutely. So good points all around. All right. Well, with that, thank you.
No, I was gonna.
Oh, you've got more.
Yeah, I've got one more thing. I feel like I've done a lot of talking today.
That's good. People like your accent.
So yeah.
They might not know what you're saying. But
yeah, they're looking at my mouth, just nodding their head. So I wanted to end with two things. Okay. First thing is I want to end with three things.
They just keep coming.
First thing is, if you're thinking about selling your home anywhere here in town, call us. We're offering a guarantee that if we don't bring you an acceptable offer in 29 days or less, we won't charge you to sell the house. Now, you can find a little bit more about that on our website, thethomasgrouplv.com. Of course, call me. I'd love to just sit down, have a consultation with you. No high pressure or anything like that. Share with you what we do, and you make the most best decision for you. Second thing is forgotten now. Second thing is if you own a handyman business, if you own a construction company, if you own a moving company, or some sort of business that works directly with real estate agents, we're looking for partners. So reach out to us at our website, and you find all of it online there. info@thethomasgrouplv.com is our email address. Contact us. We want to partner with you, share a little bit more with you there. And the very last thing is I wanted to end every market update by giving our viewers a little tip.
Yeah.
And the little tip will be something that we've learned in real estate this month. Now, I'm throwing this on you because I haven't told you we're going to do this. So I hope you've learned something in real estate this month. But why don't I go first, and I'll give you a second to think about this. So something I've learned in real estate this month that I didn't know previously. So Christina on our team just recently did a video about the condo hotels, which are, you can buy a condo in some of the hotels on the strip. And if you're not in there, they will put it in the rental pool and rent it out for you. Well, I figured out that these are terrible investments if you are a traditional investor. If you're somebody that would typically buy a timeshare or get involved with a timeshare, these are excellent because you will be able to cash flow a little bit. You'll be able to use the property at the times that you select, not when it's predetermined, via the timeshare. And then, of course, if you decide to sell, generally they have the values, they hold their value pretty well. You get your money straight back out. So that was just something that I learned in real estate this month that I thought was a little bit interesting, that may or may not be interesting to you.
Okay, my thing that I learned, and we talked about this before, is the sit-in lids. So these are, if you're from California and you have a Mello-Roos, it's something kind of similar to when they're building new construction. They being the builder, passes the cost of adding, the sewer, water lines, sidewalks, the lights and everything. They pass that on to the buyer in this special bond that you have to purchase into. And I thought you could pay it off without any penalty, at least back in the day, but there is a prepayment penalty if you pay it off before the scheduled time. So really important if you are buying new construction is to find out the terms of that sitter lid.
Yeah, absolutely. And if you're buying a resale and it has sitter lid, in this market, there's a lot of things that we can do to make sure that the sellers will pay that off for you.
Yes.
We've got leverage. So
yeah.
That's us for today at the Gilcrease Orchard. Anything else from you, Kristen?
No, roasting.
Yeah, my eyes have, you probably
Wow.
still can't see them, but I feel like they've definitely accustomed.
Yeah, I can see the eyeballs. So,
Awesome.
yeah.
So yeah, if you've enjoyed our market update, thank you so much for watching. If you haven't subscribed to our channel, we appreciate it and love you when you do so. That way, obviously, you can stay up to date on what's happening in the Las Vegas market, but we bring you lots of videos on what it's like living here as well. But for now, thank you again for watching, and we'll see you again.